It has been a torrid summer for emerging economies. The prospect of the end of massive US monetary stimulus shook those particularly vulnerable due to their large current account deficits. The US Fed did not start reducing the monthly bond buying as predicted, but it will have to happen at some point. Here to discuss the outlook for emerging economies is Glenn Maguire, Chief Asia Pacific Economist at ANZ Bank. Glenn, welcome.
It's great to be here, Lindsay.
Despite the turbulence from the markets, it's not all the fault of easing. There is plenty that the emerging economies could be doing themselves. Glenn, what should they be doing?
Absolutely, and it's important to focus on the fact that we've seen 3 rounds of quantitative easing from the US Federal Reserve in recent years. And it's perhaps been the 3rd round that it really has pumped excess liquidity into the emerging markets. And what we're seeing at this time is the relative growth outlook has been repriced. The US is a little bit more favourable. The emerging markets are viewed as a little bit more unfavourable on a softer China growth outlook, that capital is returning to the old economies such as the US. So that capital that has flowed into the emerging markets hasn't really been an input into production the way capital or labour has. So it hasn't really distorted the growth equation. It probably has led to a little bit of asset inflation. So bond prices have probably been a little bit higher, equity markets a little bit firmer, and currencies a little bit stronger than what otherwise would have been the case. So essentially what we're seeing as capital flows back to the US is some repricing of assets. And I don't think there's a lot the emerging markets can do. I think what is probably the best policy is to keep policy on a slightly restrictive side. This is the case for economies that have the twin deficits, both current account and budget deficits. They need to re-attract capital flows. So their currencies weakening will probably be one aspect of that, but keeping policy probably a little bit tighter, interest rates a little bit higher, will also be important in attracting capital so they can fund their twin deficits.
And then there is also this other massive US problem at the moment, which is obviously the US edging towards their debt ceiling. Should they default, what impact would this have on emerging economies?
I mean, I think a default or the US hitting their debt ceiling is one of these risk events. We really don't know what the outcome would be, simply because it's so unprecedented that the world's issuer of the reserve currency and the sovereign debt that backs that up is likely to default on it. But the 2 key takeaways we can probably take is it reflects the high degree of stalemate and impasse in US politics. The second one would be the impact that a default has, or a failure to increase the debt ceiling so the US can continue to issue debt obligations, what that would have on US interest rates. Because US interest rates tend to be the fulcrum of the global rate structure. If you tend to see US rates move upwards, the global interest rate structure moves with it. So one of the negative effects could be that you see a volatile period in US rates that drives the global cost of capital higher.
Okay, and finally, one area where there is still a lot of monetary stimulus likely to happen for a long time is Japan. Do you see any flow or expect a lot of those flows going into Asian emerging economies?
Absolutely, and I think one of the key things we're seeing with Japan is Abe's reflationary policy is working. And Japan is getting so close to that point where they're about to tip into inflation after years of deflation that you are likely to see further action from the Bank of Japan. At this stage, the government has announced a fiscal offset to the consumption tax increase that doesn't exactly match it. So it's likely the BOJ will do a little bit more easing that's likely to be yen weakening. And the key question is, with all this reflation, the doubling of the monetary base, where is that liquidity going to end up? And it's unlikely to stay in the Japanese economy. And when we look at companies like Toyota, whose profits are up 96% over the year, they're cash rich. They're going to invest in production in lower cost labour centres, most likely in Southeast Asia. So we think one consequence of Japanese reflation and the policies we're seeing is it's swelling the balance sheets of corporate Japan, and that money is going to find its way into the emerging markets via Japanese foreign direct investment. So that's going to be an important offset as the US moves to taper which could be a 2014 story now, we will be seeing liquidity returning to the emerging markets via Japan. So for emerging market policymakers, there probably still is the case for slightly restrictive policy settings, as liquidity will be flowing in from offshore.
Glenn, thank you very much.
Thank you, Lindsay.